Hello, all the CA final students. So today I am here with the most important basics that one require in order to crack any kind of question with regard to the Forex chapter. I'm not going to take much of your time, but complete the full lecture without putting any break. So sit at your best time possible where you can learn such that in one go you will complete this entire lecture, and never again in the coming examination you will find difficulty with regard to the basic touch of this chapter called as Forex. So many a times students are finding it extremely difficult with regard to the chapter called as Forex, whether to use ask rate or bid rate or how to understand the margin adjustments, everything. So every single minute detail of the basics which are extremely important for your exams, I'm going to cover in a quickest time possible. So please listen to the complete video. Okay, let's begin. So what are all the basics that we need to learn? One on one basis I will complete first. Number one, quotes. There are two types of quotes. One is a direct quote, another one is an indirect quote. Direct quote is something which puts the home currency in the number of units place, foreign currency in the per units place, in simple language. Direct quotation means number of units of home currency for 1 unit of foreign currency. Indirect quote is exactly reverse to this. Number of units of foreign currency for 1 unit of home currency. That will be called as indirect quotation. So in numerical terms, if I write this, picture will be very clear. $1, dollar is a foreign currency, equal to rupees 91. Rupees 91. 91 also reached now. Everyone is making a trolling as well. So the ISD code with the dollar is now matching with rupee. So anyway, we are against any controversy, but just try to understand. Rupee is the home currency. 91 rupees means what? 1 rupee 91 times. Number of units. Unit of measurement of currency in India is rupee. Number of units, 91 units. So, number of units of home currency for 1 unit of foreign currency, we call this as a direct quotation. Next, indirect quotation. Number of units of home currency number of units of foreign currency for 1 unit of home currency. Exactly reverse. Instead of writing this way, I will write as 1 rupee. 1 rupee equal to 1 by 91. Dollar 0.0109. Okay, 010989, like that it continued. I stopped with 0109. Okay, 0.0109. This is the indirect quotation. Simply to tell how to express any quotation. Okay, how to express any quotation. First, look into which banker you are discussing about. Indian banker point of view. For Indian banker, dollar is always a foreign currency. Dollar is always a foreign currency. So if a bank express the quotation like this, we call this direct quotation on dollar against rupee. This will be called as indirect quotation on dollar against rupee. Both sides are dollar, because for an Indian banker, rupee can never become a foreign currency. Rupee is always a home currency only. So therefore, this is a number of units of home currency for 1 unit of foreign currency. This is a number of units of foreign currency for 1 unit of home currency. Is a prime difference between both the quotations. Okay, I think everyone is having a full clarity up to here. Next, types of quotations. One-way quotation, two-way quotation. What is one-way quotation and two-way quotation? One-way quotation means $1 equal to rupees 91, €1 equal to rupees 83. Okay, 1 pound equal to rupees 110. Like this they will give. Understood? This is how they will give. This is one-way quotation. Two-way quotation, rupees 91 dash, rupees 93, rupees 83 dash, rupees 86, rupees 110 dash, rupees 112. Like this they will give. This is called as a two-way quotation. What way quotation here? Two-way quotation. Whenever the given quotation is a two-way quotation, we should understand there are two rates that will be given. Left hand side is a lower rate, right hand side is a higher rate. Okay, lower rate is called as bid rate, higher rate is called as ask rate. Okay, lower rate is called as bid rate, higher rate is called as ask rate. Okay, always remember, who will buy dollar from you, who will sell dollar to you? Whenever I ask that question, a common answer is banker. Customer has no control over foreign exchange in India. Dealers in foreign exchange are there. In simple language, I call banker for the purposes of this chapter. Actually, we should not even call them banker because every bank cannot do this. They should be authorized persons under section number 10 of the FEMA Act. Okay, so you should be authorized by RBI in order to deal in foreign exchange. Then you will be called as a forex dealer. You will called as what? Forex dealer. So in case of forex dealer, instead of using that language, in simple we use the word banker. Wherever I use the word banker in this chapter, it represents I'm talking about a dealer in foreign exchange. Sorry. Now let us understand how to interpret this from a banker point of view. Banker's quotation. See here. A banker will always buy and sell foreign currency. Okay, buy and sell foreign currency. $1 equal to rupees 91 dash rupees 93. I have written like this. Okay, what does it mean? This quotation is given by banker to customer. Customer did not give this to bank. Banker given this to customer. Bank buys at 91 and bank sells at 93. Means what? If a customer come to the banker and ask bank, please give me $1. Okay, please give me $1. Now we are customers buying it. Bank has to sell. Bank sells at 93. A customer came to the bank and said, please take this dollar and give me rupees. Then bank has to buy. Bank buys at a lower rate called as 91. Means what? In a given quotation, banker always makes a profit. That's called as bid ask spread. What is bid ask spread? It is nothing but the difference between the sale price and purchase price, or selling price and buying price in a given quotation. We always call that as bid ask spread or ask bid spread. Okay, ask rate can also be called as offer rate, but most of the time study material they use the word ask rate. So I am also not deviating from what institute is actually using. So let us call it as a ask rate. So bank always buys at a lower rate, bank always sells at a higher rate. In a simple language, bank never makes loss in a quotation. Banks never make loss in a quotation. Means take any given quotation. In that quotation, banker never ever makes a loss because he buys at lower rate, sells at higher rate, making an obvious gain, which we call as a bid ask spread, a profit made by the banker in a quotation. In the same way, to the converse of this statement, customer can never make a profit in a given transaction. Means what? I have left hand and right hand. In left hand, I have $1. In right hand, I am having rupees. Okay. Left hand, I gave dollar to the banker. Okay. Banker gave me 91 rupees. Why? I have dollar in my left hand. I am selling. Banker is buying it. Bank buys at lower rate. Lower rate is bid rate. So banker gave me 91. Okay. Now this 91 I shifted to right hand. Rupees. I gave this 91 rupees and asked the bank to give me $1 now. Bank will tell, give me extra 2 rupees, then I will give. Means what? I am buying at 91. Okay, I'm buying at 93, but I can sell only at 91. I'm talking about customer now. So customer will always make a loss in a given quotation. Hey, here I am making two statements. Banker always makes a gain, customer always makes a loss in a given quotation. That you have to remember. Sir, what do you mean by in a given quotation? I will give you one example. Day 1, $1 equal to rupees 91 dash rupees 93. Day 2, $1 equal to rupees 87 dash rupees 89. Let us say like this. 2 days. A bank at 3:20 p.m. afternoon, before the closing of the time period during that day, purchased $1 lakh at 91. Banker purchased $1 lakh at 91. Okay. 91 ki they purchased. Next day, the dollar rate is 87 and 89. One customer came, bank has to sell at a higher rate. Higher rate will be 89. Now what will happen? Bank is selling at 89, which they bought at 91. Bank is making a loss of 2 rupee on each dollar. 2 lakh rupee loss bank also made now. So banker always makes a gain, means not in all cases. In a given quotation, that's why I am using that language multiple times. In a given quotation, banker never makes a loss. Okay, but I buy on one day and sell on another day. Then what will happen? I am buying at lower rate. But when I am going to sell, the higher rate itself is lesser than the buying lower rate. In that case, I will definitely make a loss. For this only, I have already uploaded one video called as Bankers Hedging. Listen to that lecture. Okay, in that lecture, I clearly said why bankers make a loss and bankers how they will hedge their exposure by going into interbank market and doing the transaction. I explained in one of the videos recently uploaded 1 week back. You can listen to that. Then you will get full clarity. So the title of that video will be Bankers Hedge or Dealers Hedge. Some name I have used. Okay. Go through that. You will understand the remaining part. See, in this video, you can see Forex P2 video is there. Na? Forex P2 video. Okay. Here you can see. Leave the remaining part of the right side. This one. Here I have explained already very clearly how the bankers hedging will happen. So listen to this lecture fully. Okay, to get a clarity. So in that lecture I have already uploaded. So you can just go through that particular thing. So let us now come back. So a banker will always make a gain. Okay, customer will always make a loss in a given transaction. In a given transaction, they will make a gain or loss. Next. Now let us go into the next part. So what basic we completed? Quotes completed. Types of quotes completed. Bankers quotation completed. Understanding a quotation completed. Understanding how profit loss will be made also understood. Next discussion. Conversion. Very, 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 very important discussion is going to happen now. Conversion. What do you mean by conversion? Sometimes in the question, we have to convert the quotations and we need to understand. Sir, I will give you an example. See, $1 equal to rupees 90. Let us say 91. Okay. This is direct quotation on dollar against rupee. I want indirect quotation. How to do? 1 rupee equal to $0.0109. This is what we have already calculated. What you have done exactly here? What I have done is I have done 1 by 91. 1 by 91. So 1 rupee equal to $1 by 91. This is what I have done. Okay. So what is happening here? 1 rupee equal to dollar. Okay, dollar 0.0109 answer we got. But what you have to understand here is 91 is what? 91 is a direct quote. 1 by 91 is what? Indirect quote. Therefore, indirect quote is nothing but 1 by direct quote. Indirect quote is nothing but 1 by direct quote. Remember this rule. Always remember one rule. Indirect quote means 1 by direct quotation. That's it. That's a thumb rule that we need to remember always. Okay. Now listen carefully. Next stage of discussion. $1 equal to rupees 91 dash rupees 93. What generally people will do is convert this into, this is direct quotation, convert this into indirect quotation if you ask. Okay, what they will do, they are mucking up the concept crisscross. Okay, means what? Just take it like this. 1 rupee equal to dollar, 1 by 93 here, dollar, 1 by 91 here. 1 rupee equal to $0.0107 dash $0.0109. These are the two quotations that we get. Like this they are doing. It is right, 100% right. I don't deny. But why we have to do this crisscrossing? That people are not understanding. Let us first focus on that. That focus will create a new dimension of understanding the Forex chapter. Rather than mugging up that we need to do a crisscross, let us first understand why we need to do that adjustment, such that you will get a better clarity on what we are doing. Okay, see here. I tell this example 100 times. Again, I am repeating the same. Calculator is a commodity. Where it is commodity? India lona, US lona? Everywhere it is a commodity. See, for example, I gave 100 rupees and purchased this. One friend asked me, what you have done? What I will tell? I sold 100 rupees. I bought a calculator. I bought a calculator. Change the place now. Now we are in USA. I gave some amount of dollars and I purchased a calculator. Now, US person, what he will tell? I sold dollars. He will also tell I purchased a calculator. Indian will tell I purchased a calculator. Foreigner also is telling that I purchased a calculator, because calculator is a common commodity everywhere in the world. Like that, all laptop, keyboard, everything. These are all commodities. Whenever commodity is involved, human mind is automated naturally. We will tell what is happening to the commodity. For example, you went to the market and you purchased dozen apples. Okay, you gave 200 rupees. Now I ask, what you have done? Now you will tell, I sold 200 rupees. You will tell, I bought apples. Why? In reality, you also sold 200 rupees. For that, you purchased apples. So there is a sale of 200 rupees also happened. But we will express only from the point of view of the commodity that is coming inside. Understood the point or not? Same thing. Like how calculator, like how apples, like how iPad, phone, etc. There are currencies which are commodities. So always your expression of quotation should be from the commodity currency point of view. What currency point of view? Commodity currency point of view. Now let us understand. Indian banker, US banker. Indian banker, US banker. For an Indian banker, dollar is a commodity. For a US banker, rupee is a commodity. Like calculator, dollar is not commodity everywhere. For example, I am in USA. Okay, now tell me, I will buy dollar. No, because dollar is my home currency there. So, home currency can never become a commodity. Other than home currency, foreign currencies are commodities. So, therefore, what will happen? See, Indian banker, dollar is a commodity. US banker, rupee is a commodity. Indian banker, expression will be from buying and selling of dollar. US banker, his expression will be buying and selling of rupee. Okay. So, $1 equal to rupees 91 dash rupees 93. This is a quotation. Quoted by whom? Indian banker. For Indian banker, what is a commodity? Dollar currency. Dollar buying, dollar selling. Not rupee buying and rupee selling for an Indian banker. Okay. Okay. Now, listen carefully to this concept first. Tell me, what Indian banker is doing with this rate, 91? He is buying a dollar. Also called as, this is a dollar buy, also called as a rupee sell. Rupee sell. Okay. This is called as dollar sell, or otherwise rupee buy also happening. But Indian banker ki rupee is not a commodity, dollar is a commodity. He will tell only what is happening to the dollar. So he will tell, I bought dollar at 91, I sold dollar at 93, he will tell. He will not tell, I sold rupee at 91, okay, I sold rupee at $1. Like that he will not express. So his expression will be always from what point of view? Dollar point of view only. See, I am marking this. See here. What banker has done? I bought a dollar, he will tell. He will not tell, I sold 91 rupee. For this, what he will tell? I sold dollar, he will tell. He will not tell, I bought a rupee. So now listen carefully. US banker, let us come. Let's come to US banker. US banker will express from which currency point of view? Rupee point of view, because for him dollar is not a commodity, rupee will become a commodity for him. So he will express everything from rupee point of view. That's why, see here, this is dollar buying or rupee selling. But rupee selling to whom? Rupee selling not to you. That expression of rupee selling will be given by a US banker. Okay. US banker sells rupee at what rate? Higher rate. Therefore, this will become their higher rate here. Next. What is this 93? Bankers selling rate of dollar or bankers rupee buying. Dollar selling is also called as rupee buying. But rupee buying is an expression of which banker? US banker. This will be bought at this price. But we are writing indirect na? 1 by you have to do. So 93 will come first 1 by 93 and next 1 by 91. That's how this crisscrossing is done. Understood the point? So such that bid rate is always lower than ask rate. If you directly take 1 by 91, 1 by 93, you will get 0.0109 and 0.0107. Bid will be more than ask, which is against to the basic principle of Forex. So therefore, dollar buying can also be said as rupee selling, but you will not tell that. US banker will tell. Therefore, your buying rate will become 1 by that particular rate as a selling rate to them. So this 91 will become 1 by 91 as a selling rate here. This will become 1 by 93 as a buying rate here. Okay. This is how quotations are converted. Quotations are converted. In a simple language, what is this quotation? This is dollar in per unit. Means it is in denominator. Rupee is a number of units. It is in numerator. This dollar by rupee quotation. This is rupee by dollar quotation. This is dollar by rupee quotation. Means number of rupees per dollar, number of dollars per rupee. Both the quotations are two different things. Okay. See, I can also write like this. 91 we have written. $1 equal to 91 dash 93. Okay. I will ask you, convert this into indirect quote. Okay. See here. First, indirect quote means original quotation is a direct quote. Okay. Means what? It is rupee by dollar format. Rupee by dollar format. What do you mean rupee by dollar? Dollar is in per unit. Rupee is in number of units. Number of rupees per dollar. It is a dollar by rupee format. Dollar by rupee format. Okay. I want indirect. Means what? Dollar by rupee. This is rupee by dollar format. That will be dollar by rupee format. Number of dollars for 1 rupee. Okay. This will be the next kind of quotation, indirect. Okay. Always remember what I said. Indian banker ki this is a dollar buying. US banker ki this will be a rupee selling. So it should come to the selling side, ask side. So therefore, 1 by 91 you will write. But let us understand through a formula also. There is a formula. What it says? Ask of, let us say, dollar is called as A, rupee is called as B. Okay. Ask of A by B equal to, originally what is given? Rupee by dollar and B by A. But we want ask of A by B. Okay. It's not 93. It will be 1 by bid of B by A. What I told, ask of rupee should be 1 by bid. So 1 by bid of B by A. Bid of A by B equal to, okay, bid of A by B equal to 1 by ask of B by A. This can be written as 1 by bid of B by A is 91, 93. So ask will be 1 by 91, 0.0109, 0.0107. This is how conversion happen. We can have 1 hour full discussion on this, but since it is a pakka revision session, I am trying to cover what is required for the exams. So understood the conversion of quotations. Next issue. After that, so we completed conversion of quotations as well. Two-way quotations are the things. So now let us try to understand how to understand a question that was given. When a question is given, how to approach that. I will give you an example. $1 equal to rupees 91 dash rupees 93. Okay, this is quotation. Nothing is said in the question. Take 4 decimals for the quotation answer. Final answer amount will be there na $2,30,000. Like for the 4 decimals not required. For that you can round it off. For the question, for the quotation that a banker has to quote, you must take 4 decimals if nothing is said in the question. Or in the question entire data is in 2 decimals. Then use 2 decimals also for the answer. So nothing is said. Go by the format of the question. Question of 2 decimals answer. Nothing is said in the question. Question of 4 decimals are taken. Take 4 decimal. Question of 91, 93 is there. But answer quotation the points are coming. Then take 4 decimals and leave. If they clearly say take 3 decimal, 4 decimal like that, take it. Okay. That's not a great deal. If you do 2-3 problems, you will understand. First, let us understand how to approach to this. $1 equal to rupees 93 dash 91 dash 93. They will ask a question like this. What is the cost of buying $1 lakh? What is the cost of buying $1 lakh? What does it mean? See, whenever quotation is given and whenever a question is given, see, for example, they will not ask you directly in exam what is the cost of buying $1 lakh. They will give quotation and they will tell you are an importer. You are an importer means what? Customer is an importer. Importer will buy the goods. When I buy the goods, I have to pay to the exporter in dollar. Means I have to pay to that person in dollar means I have to buy dollar and pay. I have to steal, buy dollar and pay. Customer has to buy, bank has to sell. So how to understand? Whenever a quotation is given, transaction is given, understand the transaction from customer point of view, understand the quotation from the banker's point of view. These 2 points of confusion lead to your failure in this chapter called as Forex. See, customer, what he wanted to do? Buy dollar. What bank has to do? Sell dollar. Now bank sells at what rate? Higher rate. Higher rate is what rate? Ask rate. Ask of, always remember, fill the denominator first. Okay, what you are buying, what you are selling should be in denominator because that's a per unit because of a commodity. Commodity comes in denominator always. Hey, see here, rupees 100 per pen. A per pen is a commodity here. Okay, means per pen is a denominator. Rupees 100 you need to spend to buy a pen. Here rupees 93 you need to spend to buy a dollar. Dollar is a commodity here. So always what you are buying and selling should come in denominator. What you are buying and selling? Dollar. Ask of rupee by dollar. Now in this quotation, what is ask of rupee by dollar? Ask of rupee by dollar is $1 equal to rupees 93. We want how many dollars? $1 lakh. Equal to how many rupees? 93 lakh rupee. This is the answer for cost of buying $1 lakh. Next, question 2. Receipt on selling $75,000. Receipt on selling $75,000 means if you sell $75,000, what will happen? First, understand the transaction from the customer, remaining thing from the banker. Okay. Customer, what he wanted to do? Customer is an exporter, sold goods, received dollars. FEMALA, there is a provision. You can't hold dollars in India. You need to convert them into rupee. Therefore, tell me, I'm an exporter. I exported goods. I received $1,75,000. Now, what I have to do? Sell the dollar to the banker and take back the rupees. So, customer wanted to sell. Banker has to buy. Bank buys at lower rate. Lower rate is a bid rate. Given quotation, the required quotation is bid of what banker is buying? Dollar. For what? Rupee. What is the bid rate? $1 equal to rupees 91. How many dollars you are having? 75,000. How much? 75,000 into 91. 68 lakh 25,000 is the answer. What is this? This is the receipt if I sell $75,000. Next. Question 3. Complication will start. Please listen. Cost of buying rupees 2,50,000. What is this? See, now the quotation, the confusion will start. What is our quotation? $1 equal to rupees 91 dash rupees 93. This is quotation. Now, what is the commodity? Dollar. So, transaction also should be in dollar terms. But the problem is, commodity is in dollar. Previous example, commodity is dollar. I am buying dollar. I am selling dollar. And what is the commodity? In that currency only buying and selling is happening. Straightforward we will do the answer. But problem will come when the question comes like this in exam. Okay. I wanted to buy rupees. But rupee is not per unit here. So what you wanted to buy is not the per unit here. How to approach? There are two ways to approach this answer. Alternative 1, alternative 2. I will always recommend student to go by alternative 1. Alternative 2 is a little bit lengthy and risky as well in exam. Therefore, I will always suggest to student go by alternative 1. Okay. How to do alternative 1? Alternative 1 is look at the quotation and see what is the commodity. Okay. I looked at the quotation. Okay. What is the commodity? Dollar. Okay. But in the transaction given, what is the currency I need to buy? Rupee. Both are same or different? Different. If both are same, straightforward, we can do. But here, commodity is dollar, but the transaction is happening in rupee. How to approach these kind of questions? Currency options and currency futures video I uploaded. There, same problem came. At the time I explained there. But those who don't have a strong command over the basics, listen now. So, cost of buying rupees 2,50,000. Okay. So, again, restart. Commodity is dollar, but the transaction is in rupee. How to tackle? Alternative 1. Forget about what he is asking. Say only what is happening to dollar. What is commodity? Dollar. So, tell what is happening to dollar. That's it. Per unit ki what is happening? Okay. I wanted to buy rupee. Reversal, what you can tell in dollar terms? I wanted to sell dollar. Okay. So, customer want to buy rupee. Customer wanted to sell dollar. So, tell me now. Customer, banker. Customer wanted to do what? Sell dollar. Sir, no sir, I wanted to buy rupee. Commodity is dollar. Tell what is happening to dollar. Adi mattume you need to sell. Okay. So, buy dollar, buy rupee. Buy rupee can also be called as sell dollar. So, I will sell dollars and buy rupee. So, per unit la dollar is there. Tell what is happening to dollar. So, customer wanted to sell dollar. Bank has to buy dollar. Bank buys at lower rate. Lower rate is bid rate. Quotation required bid of rupee by dollar. Rupee by dollar. So what is the bid of rupee by dollar? $1 equal to rupees 91. $1 equal to rupees 91. How many rupees I wanted to buy? Rupees 2,50,000. Tell. 2,50,000 divided by 91. Okay. 2747.25. 2747.25. What is this 2747.25? What is this 2747? I need to sell $2,747.25 in order to receive 2,50,000 rupee. Cross verification also we can do and check. See, I am selling $2,747.25 rounded off. 2 decimals rounded. Okay. So I am selling this. Customer selling this. Bank has to buy. Now tell from the direct dollar point of view. I am selling dollar. Bank has to buy dollar. Bank buys at lower rate. Lower rate is bid rate. Bid rate is 91. 2747.25 into 91. Exactly 2,50,000. That's how we need to understand. So this is one approach. This I call direct approach. Means what? Quotation, what is there? Dollar. That's it. Forget about all other things. What is happening to dollar only you think and do the answer. Answer will go right. Okay. No, sir. Quotation is in dollar, na? But the transaction is in rupee. I will go by transaction, not by quotation. Then also answer should be right, na? Yes. How it will be? Using the formula conversion. Means what? Given is rupee by dollar, where dollar is in per unit, buying and selling is in dollar. But in the given transaction, rupee ki buying and selling happening. Always a buying and selling thing should be commodity coming in denominator. Required is dollar by rupee. Required is dollar by rupee. So now tell me, now go by transaction. I wanted to buy rupee. I wanted to customer, banker. Customer wanted to buy rupee. Okay. Buying rupee 2,50,000 na? Buy rupee. Bank has to sell rupee. Bank sells it higher rate, rupee commodity. Higher rate will be ask rate. Required quotation will be ask of whatever you are buying and selling should be in denominator. Dollar by rupee. Okay, dollar by rupee. But given quotation is in dollar by rupee format, rupee by dollar format, rupee by dollar format. How to do formula conversion? Ask of dollar by rupee can also be written as 1 by bid of rupee by dollar. That equal to 1 by bid of rupee by dollar is how much? 91. This is the quotation. Okay. Into how much rupee you want? 2,50,000. So 2,50,000 divided by 91. 2747.25. Again, same answer came. So, whether you are going by transaction, whether you are going by per unit, both will give same answer. But these conversions, formula conversion, students are doing mistakes. Institute sometimes will do like this. That's why they don't understand what is happening in the question. Better always simple. Per unit, what is there you see? Dollar, that's it. What is happening to dollar only you tell. That's it. With that, answer will be completed. Clear, everyone? Okay. Now we understood the two-way quotation and their conversions. Okay. There is another concept called as a cross-currency quotation. What is it? Cross-currency quotation. Cross-currency quotation means what? Cross-currency quotation means there will be two currencies. Okay, there will be three currencies. I'm very sorry. There will be three currencies. For example, importer, exporter. Importer is in India. Exporter is in Thailand. Okay, means importer is buying the goods. Indian is buying the goods from exporter. Has to pay in Thai bahts currency. But generally India who will buy in Thai bahts? Yeah? Transaction I wanted to do, but there is no actively quoted amount between rupee and Thai bahts. Therefore, what we will do is rupee is quoted against dollar. Thai bahts are also quoted against dollar. We will take this as a common currency and create a quotation between rupee and Thai bahts. I repeat again, listen carefully. We are making a transaction with a person in Thailand. Currency is Thai bahts. But India, who will actively buy and sell Thai bahts, generally dollar is a universally quoted currency. Therefore, when two currencies are not quoted against each other, but both are quoted against a common currency, we create a cross currency quotation using a formula A by C equal to A by B into B by C, where B is the common currency. Okay. A is our home currency. C is the foreign currency. B is the common currency. Means what? Let us say, for example, $1 equal to rupees 91. $1 equal to Thai bahts 20. I don't know exact quotation and no one need to know. Just example 20. Okay, 20. This is the quotation. But rupee dollar quoted, rupee dollar Thai bahts quoted, but rupee and Thai bahts are not quoted. We call dollar as a B currency, rupee as a currency, Thai baht as a C currency. Rupee by Thai baht is equal to number of units of home currency for 1 unit of foreign currency. Rupee by Thai baht equal to rupee by dollar into dollar by Thai baht. Into dollar by Thai baht. Okay. See here now. Rupee by dollar. How much? 91 into this is a dollar by Thai baht. This is dollar by Thai bahts. But the given quotation is Thai baht by dollar. So I can write it as 1 by Thai baht by dollar, which will become 91 into 1 by 20. 91 divided by 20, 4.55. This will be quotation for 1 Thai baht equal to rupees 4.55. Like this you have to understand. So when two quotations are not directly quoted against each other, but both are quoted against a common currency, we can use this concept called as, okay, we can use this concept called as cross currency quotation. Next basic concept, margin adjustment. An adjustment here, margin adjustment. What is this margin adjustment? They will give a quotation in your question in examination. Okay, you will get one rate. They will tell banker's margin 0.25%. Now, whether to add or deduct, we will get a doubt. Okay, that doubt we will get, whether to add or deduct. How to adjust the margins? See here. Whenever a margin is given, they will tell banker margin or margin. That's it. What to do is a question now. In simple language, what customer is doing in the question, you see, importer means customer will buy currency. Bank has to sell. Bank sells at what rate? Higher rate. Margin will add to it. Further, it will become higher rate. If it is 91, I will add 1 rupee margin and make it 92 when I am selling. Buying rate reverse. -1 make it 90. Means what? Bank margin always will be given in the question, should be understood from banker point of view. In the question, if ask rate is there, add the margin to the ask rate. Bid rate is there, deduct the margin from the bid rate. Adjustment over. Next one. Whenever a question comes on appreciation and depreciation. Appreciation and depreciation. What do you mean by appreciation and depreciation? Whenever a currency is given in the question, they will tell it is appreciated by 10%. See, $1 equal to rupees 91. Dollar appreciated by 10% means a dollar should not increase. Opposite thing should increase. For example, calculator is 100 rupee. Calculator is inflated. Means calculator size inflated. Money required to buy the calculator is increased. Means dollar appreciated by 10%. What does it mean? $1 plus 10%. 10% should be added to the opposite one. 91 into 10%, 9.1. It will become 100.1. So now you observe, dollar appreciated. $1 key, now I have to spend 91, but after that 1 year, I need to spend 100 rupee. Dollar appreciated, rupee depreciated. Dollar appreciated, rupee depreciated. Okay. So in this, what you understood, they gave you spot rate, they gave you appreciation rate, you calculated this value. Sometimes in the question, they will give this and this, and they will ask you this. This is called as calculation of premium or discount as a percentage. Premium or discount as a percentage. For this, there are two formulae. If you are doing from per unit currency point of view, number of units currency point of view, means denominator, numerator currency. For example, $1 equal to rupees 91. Okay, $1 equal to rupees 100.1. They ask you to tell what is the appreciation for dollar. What is the appreciation for dollar? Dollar is what currency per unit? For that formula is okay. If this is 1 year na, so 12 by n will become 12 by 12. If this is for 6 months na, 12 by 6. Like that we need to do. F forward rate 100.10 spot 91 divided by 91 into 12 by 12 means 1 into 100. 100.1 minus 91 whole divided by 91 into 100. Okay, see there. 100.1 minus 91 whole divided by 91 into 100. How much? 10%. This is how this 10% is calculated. Okay. So there is an appreciation by 10%. Number of units currency formula will be S minus F by F. Okay. S minus F by F into 12 by N into 100. What is the spot? Spot will be 91. Minus forward will be 100.1. Whole divided by spot is 91. Into 12 by N means 12 by 12, 1 into 100. 91 minus 100.1 whole divided by 91 into 100 minus 10%. This plus means what? How much percentage dollar appreciate, that much percentage rupee depreciate. Means whenever I say dollar appreciated by 10%, that can also be understood as rupee depreciated by 10%. That's why this formula is more wise, but study material also uses this formula. If they ask question from dollar point of view, do this. In the exam, if they ask from the rupee point of view, do this. Okay. And what you have to understand, per unit point of view, if the question comes, do this formula. Number of units point of view, they use this formula. But both sides answer should be same. Understood? If rupee depreciate by 10%, dollar can't appreciate by 12.5%. Not possible. If you depreciate by 5, I will appreciate by 5. If you appreciate by 6, I will depreciate by 6. Okay. These are all the basics one need to know in order to understand and do the remaining questions inside the Forex chapter. Okay. Properly do all the basic questions that were there in our question bank. You will get a full clarity. Okay. Thank you.